Very good morning then. Welcome to the briefing for Thursday the 27th of October. Hope you've all had a pleasant evening. Looking at the markets this morning and just been talking to one of the guys here, and obviously there's been a lot of corporate earnings that have come out, and we've seen that reflected in volatility we've had in the DAX future already. That kind of gap lower, we rallied up to pivot, fell at the cash open, and now we're seeing a bit of a bid tone once again. Looking at the other assets though, you've got euro dollar is completely flat, cable is broadly unchanged, it's down slightly, the dollar index only up marginally, but pretty sideways action seen overnight in Asia and this morning. Gold, let's just take a quick look. Gold as well, it's up a touch around $2.50 or so, but I mean you've seen the kind of usual scope of movement in gold, so that's a move higher really since Europe have come in, but nothing too great. And the S&P you can see pretty locked around pivot at this point. And so other really than the DAX, there hasn't been too much market movement. Obviously a bit of downward movement in oil though, we'll talk about in a moment. And what I was just talking to one of the guys here about was about the kind of monitoring sentiment and then also themes in the market that are ultimately going to provide you with some sort of direction. And when you think about it, with the US elections, actually it surprised me that the market in terms of financial press has not been talking about it more. I can assure you by the end of next week that will certainly start to escalate as we come closer towards the election. In terms of people's forecasting of the event, in terms of what could happen, let's say, if Trump were to win. So that's kind of a little bit in the distance at the moment. You've also got the Fed interest rate hike. That's kind of on the back burner, given that December's the key month. Likewise with the ECB moving the kind of goalposts back to December for when they're going to likely extend their QE program. So right here, right now, obviously earnings is grabbing a lot of the attention, but that probably explains as well a lot of the tight correlation that you've had between WTI crude and the stock indices, because what traders inherently do is they need some sort of guides to market direction, and when oil is seeing some pretty large fluctuations, as we obviously saw yesterday with that DOE release counter to the API number, we blasted higher. You remember the S&P went with it, and then actually by the time we got to about 6 o'clock, so an hour and a half before the NYMEX pit close, we'd already reversed the entire move. Now, understanding that move, I think one is this is obviously a tradable fast money situation when you get a market expectation and then the actual release comes out completely against that, and hence the market was positioned for builds, it gets a drawdown, and we shoot high in very quick fashion. The only problem is that, you know, these comments coming out of this OPEC, non-OPEC deal, the market is in a state of, I would say, a fragile conviction that it has on whether or not this deal is going to get done, i.e. implemented what they agreed in Algeria about cutting production. And so actually crude has pulled back pretty quickly, and the chart I wanted to show you as well is, in addition to the fragility of that agreement, is also the fact that the size of the cut they're talking about, global supplies have exceeded demand for 3 straight years, and resulting in the accumulation of all inventory surplus big enough to fill about 160 super tankers. So while cutting output to the low end of range adopted last month would stop a further expansion, it would curb the existing excess by just 11% next year. And you can see that graphically down here. Make that a bit bigger. This is 2016, 2017. So actually the change in stockpiles, you know, we've been oversupplied in the market. That kind of glut that you often hear referred to has been in play for some time, and actually in terms of trimming stockpile surplus, it will only be a very minimal amount. The actual cut is almost a token value. To actually have a material impact in itself, even if it is implemented, means that maybe it won't actually make much difference anyway. And I think people are starting to come to that conclusion as well. So it seems to be also technically, given the fact that we're sitting around, when we were looking at this earlier in the week, that kind of 49.15 level on the downside, which kind of defined this movement we had late Sep and October. If that deal does break down, there's a long way south back towards 46, 44, if not 42.5, as given a bulk of this move in terms of the gain that we've seen through September was on the back of this cut in production. So failure for that to materialize would open up a lot of clean air to the downside. One other thing to just be aware of from overnight, we did have the Chinese industrial profit numbers. Industrial profit growth softened in September. You can see this chart here from the FT. Industrial profits at large firms in China grew 7.7% year on year in September, down from 19.5%. So still a fairly impressive number, but a very sharp pullback on what we had in the prior release, and as such, sentiment was a touch dampened overnight in Asia. But this morning, let me just show you that Chinese chart of industrial profits. So that was the 19.5, and this is a quite dramatic pullback that we've had more recently. And obviously, economic data out of China, although it's probably not a real focus for the market at the moment, obviously it does not and will not take much for it to start affecting and seeping into Fed officials' minds when it comes to pulling the trigger on eventual rate rise in December, and whether or not that's going to be viable, given the fact that they've delayed that through much of 2016 on the back of external events, not so much domestic events in the US. The next thing to really look at, well, I can just see here the DAX pushing up fresh highs, so starting to see some further momentum. You got that high print seen from yesterday afternoon in the DAX. We are just testing that as I speak right now. So it looks like some further conviction on that move on a breakthrough pivot, 10,700, and now we're retesting those highs. So one of the main things then from this morning has been earnings. And there's been a lot of German earnings in particular. You've had Volkswagen, Deutsche Bank, BASF, just to name a few. And probably the one that's helping just lift sentiment at this present point in time, although it's been choppy price action, has been Deutsche Bank. The main headline reading, I guess, encapsulated: Deutsche Bank posts surprise profit on trading jump and costs drop. So unexpectedly returned to profit in the third quarter, beating analyst estimates. The chief executive officer continued to lower costs, and the investment bank reported a jump in revenues. Obviously, this is coming in the context of a huge amount of negativity for the likes of Deutsche, which were trading just sub 10 euros not so long ago, only a few weeks ago, and having declined over 50% year to date at one point. This certainly is some welcome relief from a sentiment point of view, and for a sector, banks which tend to be highly interest rate sensitive and economy sensitive. Broadening that out, BASF answers skeptics with a estimate beating quarterly profit. Now, the reason why I'm pointing some of these out, and Volkswagen were also up post earnings, is when you look at the likes of the sector allocation of the DAX index. Now, I gave a lecture yesterday to some of the new guys about the equity markets, and I think it's just worth a refresher on this point, is that actually Deutsche Bank, now I do have a chart here, this is slightly dated, but the percentages are, let's say, roughly the same. Deutsche Bank's actually not that big. As I say, their share price is got under immense pressure of late, and to levels not seen, well, for a very, very long time, if not ever before, for the stock's price. Certainly under 10 euros means that they've become a mammoth beast that shrunk considerably in share value, although their assets under management and assets that they own are still obviously very large. But actually, if you look at the top components, Bayer, who've already reported before. You got BASF with positive earnings this morning, and these other companies here. So when you start looking at someone like BASF, which accounts for, let's say, 10% of the stock index, then you have automobiles, which on a sector allocation account for the largest amount, 13%. So between Volkswagen's earnings, which were positive, BASF earnings, which were positive, that's the automobile and chemical largest single stocks of the two largest sectors, which comprises of pretty much a quarter of the entire index. So you start to see how when you're anticipating preparation, you know these earnings reports are coming out. Now, another important thing is I heard a couple of the guys talking about what times did these come out. So German earnings come out very early, usually between 6 a.m. and 6:30 a.m., well ahead of the futures open at 7 and the cash open at 8. So in terms of German earnings, they're all out pre-futures open. So they're like the Deutsche ones, for example, came out shortly after 6 a.m. The UK ones tend to be slightly later as a reference point. So as you can see, the DAX then punching higher this morning. So as I say, two of the biggest sectors taking a boost on those earnings reports. And I guess in terms of Deutsche Bank, I would say that's more of a sentiment boost, which helps with the overall prevailing trend. And then obviously now technically we start to see extension on moves as we break through things like yesterday's high, for instance. It takes another kind of pop on the upside. Other companies this morning just to be aware of in the FTSE 100. You've had Barclays. Obviously you've had bad news for Lloyds yesterday. Their shares are under pressure. More PPI related charges that the bank are undertaking. I've read similar negative comments in regards to RBS. But Barclays posts a jump in quarterly profit on their bond trading revenues. So the trading revenues replicating then in the UK listed firms like Barclays, the same as similar of what we've had for some of the investment banks in the US. Actually a pretty decent bounce and strong recovery in their trading revenues, helping lift their overall performance to exceed expectations. So Barclays profit rose 35% in the third quarter as revenue from that fixed income trading surged actually to its highest in more than 2 years. Now, one other site that I know some people look at, I would say it's good from a graphical point of view, although I wouldn't say it's overly beneficial for a trading execution. But there's a site called Finviz, some of you might be familiar with, and what it gives you is just a graphical representation of how the kind of land lies. You can define this by, let's say, S&P 500. You can see here by sector, technology, services, basic materials, and so on. But if I click on world, essentially what it gives me is each geographic region. So I can see here with Germany, I can capture here, if I hover on the top country name, I get the full list, and I can see Deutsche Bank, obviously a standout, up 2%, AIXG though down 7%. And what it's quite useful for is identifying areas of company outperformance or underperformance. And then obviously I'm looking at the read across to index or constituent weighting and then sector allocation, and then that's how I deem then how important is this news to overall influence the stock or the index future. So that's kind of the breakdown of how my mind is working, if you like, when I'm reacting to this news. And it's these sorts of things that will ultimately help you in the future. Looking back then, as I say, this DAX move, quite interesting, although the DAX is rallying. It's taking the Euro stocks higher now to test R1 as well. If you look at the Bund, it's not moving at all. Absolutely flatlining. Down, well, it's up about 5 ticks, but certainly you would imagine in normal economic theory, the DAX rallying, the Bund should come under pressure. The Euro, top left, you can see not moving. What I would say is that this is when you've really got to be, as an intraday trader, you've got to prepare in advance for the earnings reports that are all scheduled and all accessible on your Bloomberg earnings calendar. You need to be aware of who's coming out and do all this background research the day before. As you can see here, given the lack of any real fundamental macro driver, the index futures traders and the stock traders are very focused on these single stock stories. So trying to trade the DAX today, for example, unless you're fully up to speed with all the companies that have come out and how they're performed and their numbers, then how can you actually trade that index with any type of conviction, which is ultimately what you need to add confidence and more conviction in those trades that you put on. So keep that in mind when you're trading over earnings season. Just to repeat as well, if you remember, and those who weren't here at the time, Piers did an excellent video which we recorded, and it's on our YouTube channel. If you search it back to last week, it's about how to trade US earnings season. The same principles apply for trading European earnings season. Please do have a look at that if you get time. Okay, let's have a quick look at the calendar for today. Coming up, we do have an interesting release coming from the UK. You've got UK GDP. Now, this is actually the advanced reading. I think this is a typo that you can see here. This is the first look at third quarter growth in the UK. This obviously then is going to capture a lot of the national press headlines, because this is kind of the new era of growth post-Brexit. The one thing I would say is that sterling positioning at the moment, we are, let's say, broadly flat. We're slightly negative, but everything I've read is talking about the fact that this GDP data is expected at 0.3% quarter on quarter. That's what we're looking at here. You can see that's a drop off from 0.7, but most people are talking about actually a upside surprise. Actually, the UK GDP wise for the first reading of Q3 is actually quite strong. Now, what I would say then is that given the market is expectation value is biased to upside, it means that any downside number is going to have a bigger market impact. So keep that in mind. That means because the market is already positioned for a positive number. So that means any positive number, you're likely to get a much smaller return in terms of price movement. The bigger surprise and shock will come if we get a disappointing number. So that's how I'd be kind of looking at that figure as we go into the release at 9:30. Ultimately, though, the reason why people have that thinking is if you think about the economic data generally that we've seen after the Brexit, on the balance of let's say, looking at the data for how it's come out, it's generally been more positive than negative. And obviously, the weakness of the sterling currency has given a lot of things a big boost. It's only now, as we go further down the timeline, that we're starting to see things like inflation creep up and consumer prices go up, and that might start to feed into some of the negative points of data as we go through the coming months. And so it wouldn't be too surprising to have a pretty strong reading and then to see that get revised lower as we go through the months ahead in terms of the Q3 performance. Okay, another look at the calendar for later. US session, you've got durable goods orders, the weekly jobless data, and you've got pending home sales coming out of the US. So a couple of things coming out, and certainly these will all be digested by the Fed members. I would say probably durables will be the most interesting. The job situation is fairly consistent at this time being, and pending home sales the same. So it's the durables probably the one which will carry the most market impact. And then looking at speakers, ECB's Mersch not speaking until well after European close, so nothing too much to watch out for there. I've just got a question just to address Andy asking about what tier is the GDP. I'd definitely say the GDP from the UK is tier 1 today. That's because it's the advanced reading. That's always going to inherently carry more interest. Quick look, DAX, just to finish off, another push higher. I guess from here, you got R1 coming in upside. Let's stretch this out a little. Obviously that R1 kind of coinciding with that late Eurex trading that we had at the end of the 25th. So that's just dating back to Tuesday night, kind of coinciding with that level. And then above here, you've got the high print from the end of last week that was seen up at 10,826. Okay, guys, going to leave it at that. That was the DAX chart there, just was showing you. But going to leave it there. Any questions, please just fire them in the chat. Happy to help. Otherwise, enjoy your trading day. Thank you.